Welcome back to the $1,000 challenge. So again, guys, the market was very tricky this week, and I want to show you what's going on. As you can see, the portfolio is back down to around neutral, and I want to explain what happened so far this week. All right, so if we're going to go through our trade history, basically the first trade we took was on Delta Airlines, so stock symbol DAL. And so the reason why we were I was bullish on this one was because the software came out as a great buy, of this stock, and I was like, okay, it looks like it's headed to the upside. Purchased some Delta Airline, a put credit spread, which means I was hoping for it to go up in value. I bought it around here for the put credit spread. I woke up the next morning and was able to sell it. So I collected about $9 in credit. I collected about $12 in credit, then sold it for about $3. So I collected $9 total on that trade in an overnight swing trade. So that was great. It was about an 8% gain. In the what am I saying? It was about a 1% gain on the portfolio overall. And so if you actually look at the portfolio, we were actually up about 4.4% earlier this week. Around 6% total here. It was really awesome to see. But then what did I do next? I bought some QQQ, a put credit spread on QQQ. QQQ was recommended as a great buy, so I bought here on QQQ. So I think, where did I buy the credit spread? I must have bought it around here, around May 18th at around 10:50 a.m. That sounds about right. And so I bought a put credit spread here. It started to go up, and I actually was up about 50% on the trade. But I was like, nah, if we slowly stay up and stay above 318, then we'll do well. And then overnight, we went below 318 because of a huge gap down in the market. And so the market and tech and everything gapped down, and that led QQQ to come down as well. And so instead of letting it expire, because if it expires, then I would have lost $188, I decided to just buy it back at a about a $45 loss. So again, I had that $45 loss on there, and so that's what brought me back down to around neutral. Now again, hindsight is 20/20, right? Like if I would have let this go up, then right now I probably would be making some money because it would be above 318 and the contract was expiring today. So I would have made the whole, I think it was about $11 that I had in credit on this put credit spread. So I would have made $11, but hindsight is 20/20. If it would have kept on crashing, I was okay with my position that I sold it and made that equal loss. So now we'll look at the portfolio over this month time span. We are back to neutral. All right, guys, this is the $1,000 challenge. I'm doing my best to grow it as fast as possible. But again, I'm also not a super risky person, so you're not going to see me taking huge yellow plays. But again, I like being honest, and so here's the honest truth. We were up, we were doing great. We had one miss trade here, and then now we're back down to even. So again, it's better than being super red or super negative, but we are back to even. So again, we'll be working our way back up. I'm looking to take some trades this week. Gold was a trade that I really wanted to take. I'm super sad that I did not take it. I was looking at gold on Monday. So I think that was around, what was it? 17th, 18th. Yeah, it was right here on the 17th. It was right here around 9:50 a.m. I was looking to take a credit spread on gold, and I should have, but I hesitated. You can see here my history cancel. I had some put credit spreads put in, then I canceled the orders. And so that was just me. Austin, you kind of need to, take better trades, and you need to know what you're doing. And so I knew that I wanted gold, and for some reason I just didn't go after it. And so next time I will. And QQQ was just a mess up play, but I think I sold at the right time given the circumstances. And yeah, that's basically the $1,000 challenge. So for those who don't know, if you want to learn an exact step-by-step system and strategy that we're using for this challenge, click the first link below, and it's going to show you it's going to give you a free PDF of the system and strategy that we're using. But basically, I am using credit spreads because they're an easier way to kind of profit. Again, you do have a bit more risk than you do with a normal stock or just swing trading a stock, but you do get more profit as well. And so it's a great way to do it. And I was going to stick to credit spreads for this strategy, considering the market is so wacky right now. All right, guys, I hope this makes sense. This is a breakdown of the $1,000 challenge today. The key takeaway from today is understand when your option expires and understand risk and having an exit strategy. Yes, I stuck to an exit strategy, but I wasn't too sure what I was going to do. I was fairly certain it was going to stay above 318, and again, it ended up staying above 318, so my fault. But having a strategy, knowing my max loss was 180, and being able to get out of the loss for a loss of $40 was a huge win for me. So that's what I ended up doing. And so yeah, know your worst case scenario and plan for it. All right, guys, this is the $1,000 challenge. If you want to stay tuned, make sure you smash that subscribe button, and I will see you in the next video.